Hello everyone. Internal Revenue Code number 23, adoption expenses or adoption credit. First of all, please note this video is not a legal advice. It's only for educational purposes. So, allowance of credit. Um, let's talk about the credit in general first. So, if you have complete adoption or in the process in completing adoption, this actually qualify for I would say a good amount of credit from the IRS. So it is qualified for a federal credit. So the first thing you need to know is what is the qualified adoption expenses. Usually, if you have court fees, attorney fees, sometimes if you have a travel expenses in order to finalize the adoption, and basically any expenses that related to the adoption should be qualified. Number two, so right now it's just here year credit allowed. It's just explain to you when which tax year you can take the credit. So there is two situation. The first one, if you have expenses and the adoption take more than 1 year, let's say take 3 years or 4 years, you can't take the credit in the first year. You have to wait 1 year, and after that, if you want, you can. You have the option to take the adoption credit in the second year, even the adoption itself is not yet finalized in the second year. So this is the first scenario. The second one, in case the adoption was finalized, you can take the credit in the year that you actually paid the expense. So sometimes you could finalize the adoption in 2025. You still have expenses in it 2026. You can take also you need actually to take the credit in the year you paid the expenses. So if you paid the expenses in 2026, even if it was finalized in 2025, you still have to take the credit in 2026. All right, so the credit is 10,000. This is I just need to make sure that I do not change anything with the code. So this is right now, I believe it's for 2025, 17,280 for 2025. It's not 10,000, it's 17,280. So this is the maximum amount of credit that you can take, and portion of the credit is refundable. It's 5,000, still 5,000 for 2025. So you can take, even if you don't have a tax liability, you still can take 5,000 as a refund. So the limitation also, there is a different numbers here. The 150,000, I believe right now it's 290,000. Let me just get the right one. It's actually 259,190. So what this saying here, that if your income, adjusted gross income, exceed $259,190, it's a start to phase out. And the 40,000 is just to make it easy. Let's say this credit, if your adjusted gross income exceed $299,190, it's completely phased out, no credit for you. So this is one of the, this is not one of the area in the code that penalize the married individuals, because right here is, first of all, you can take the credit if you file as a married filing separately. The second thing is, if you married filing jointly, which you will probably have more income, you still have the same limitation. So if you are a single, you have 259,000, you still can take the credit. And this usually make it easier for single or head of household taxpayers to take the credit than the married filing jointly. I mean, I'm assuming maybe this one, because like married filing jointly, they don't really need to adopt if they can like get kids, you know. I'm just kidding, but yeah, this is one of the area of the code that it's penalize the merit filing jointly. It doesn't give them the double amount, and it's very rare to see this in the code. So this is not the usual. Usually they increase, or most of the time they double the amount for merit filing jointly, but not this time. All right, so the information of adjusted gross income section. Okay, so basically here they are saying if you have, for example, foreign wages exclusion, like for example, if you have a 2025 and you have in tax year 2025, you have like 120,000 excluded from your income as a foreign income, you need to add it back in order to calculate the limitation. That's what exactly they're saying here. It's not only the foreign income. There is section 911, section 931, section 933. So any income under these sections, if it was excluded, you have to add it back to your adjusted gross income. All right. So denial of double benefit. Nothing new here. If the credit is taken as a deduction anywhere else, you can take double dip the same amount grants. If the adoption itself, you did not pay the expenses out of your pocket, you take them as a grants or whatever, of course you can take the credit. You cannot take the credit, of course. All right. Finally, for this video, because this video I will have to do it on two parts, so this is part one of the video. The final thing here I would like to talk about is the carry forward of unused credit. So the code here say, so the section 26A is the limitation for the tax liability. So let's see what exactly the section 20. So it's the limitation based on the tax liability. For example, we said that the credit is around 17,000 and 5,000 is refundable. You take the 5,000, you don't have any tax this year for tax year 2025. There is still 12,000. But because of the limitation of your tax liability, which is section 26A, you cannot take this credit for tax year 2025. So the credit itself, it does not disappear. You still can take it. You have up to 5 years to carry forward the credit. All right. So this is what it's saying here, and the limitation here is they are saying actually it's fifth taxable year, and they also saying here first in first out. So what they mean here is that you have multiple years of credit. So you have like 2025, 2026, 2027. You have like multiple years you can claim the credit. The first in is the first out. That's what they're saying, and again it's 5 years. So you can carry forward the credit for 5 years. All right, that's everything for this video today. If you finished already this video, you should expect the second part of this video soon. So make sure you watch the second part. Thank you and have a wonderful day.